is time to talk mortgage rates, and Debbie Thomas from the Mortgage Group joins us to talk about, we know that interest rates are at an all-time low, but there are other product changes that have occurred also in the last few weeks that are enticing.
It's always changing. I just want to touch a wee bit on rates before I move on to the products. The variable rates are now coming in at prime plus 60, so that means today we've got 2.85.
Wow.
Mark Carney, the the governor of the Bank of Canada, has said that he's not changing prime now until the second quarter of 2010.
Wow.
So if you're thinking of taking a variable rate,
he's not?
Go for it. Yes,
wow.
he made a commitment last week.
Okay.
Doing that. Also, 38% of Canadians did take variable rate products last year. So if you want to go down that path, great. On the other end of the spectrum, we also have a 10-year mortgage term now, where a lender this morning is actually given a rate of 4.99.
So which is unheard of for a 10-year rate.
Historically, never happened before. So those that want that peace of mind for 10 years might want to think going that route. In between the 5-year rates, you know, be careful of all of those special rates, those quick close rates. A lot of people found that when they thought they had a great rate a year or two ago, and they wanted to now pay it out and lock into today's lower rates, they can't. It's fully closed. You can only pay it out if you sell your house. So make sure you talk to somebody, a mortgage professional, about that detail.
Don't get caught up in that.
Don't get caught up in rates. That's important, but it's not the major point.
Okay, what about some of the products?
We have a new product out called the Smart Saver Mortgage. So a new lender has come out where if you have a line of credit, if you have a cash checking account or savings account, depending on the amount of those accounts, it'll link into your mortgage. So let's say, for example, I have $20,000 in my savings and my checking.
Yeah.
I have $200,000 mortgage of a mortgage.
Right.
At the end of the month, I'm going to determine what percentage of my savings, and the following month, the lender is now going to reduce my interest rate by that same percentage point. So if I'm a good saver and I manage to keep my balances up, I then can take advantage of some rate declines from month to month going down the road. So that's very, very unique. We've never had that in Canada before. It's been in the United Kingdom.
Yeah.
Another lender has come up with a 21-month term, which we've never heard of before.
A fixed term?
Yes, we've had a 1-year, a 2-year, a 5-year, but now
why
it's a
21 month?
Well, I still need to do some more research on that.
Is it a better rate or something?
2.9%.
Wow.
2.9%.
Wow, that's amazing.
So
okay.
Those are some changes that have occurred.
We have to leave it there. So every month I talk to you, I have so many more questions, and I always go back to my banker, but that's good, right? Becoming informed is good. Debbie Thomas at the Mortgage Group. If you have any questions for her, you can email her only, dthomas@mortgagegroupgrp.com.